Hello, everybody. Good morning. It is September 29th, 2022. We're going to start the video today with a little bit of a history lesson. So without further ado, here we go.
Down 1.7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets.
Let's talk about the speed with which we are watching this market deteriorate.
We're red everywhere, essentially, down by 4-5%.
We're down over 16%.
Dow at the same time has fallen about 18%.
The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
Two-year no yields went from 190 to 166 in the blink of an eye.
On the NASDAQ, everything and more has been completely wiped out.
It was the worst day on Wall Street since the crash of 1987.
From the financial capital of the world, the opening bell is going to ring in 5 seconds, and to be honest with you, we wish it wouldn't.
Traders here working the phone say a lot of their customers are freaked out, waiting to see how low the Dow will go. They're focused on the Dow, not so focused on OPEC. Yes, OPEC did cut production by 1.5 million barrels per day.
Really, you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure, Yahoo down 8.5%, Cisco 6.5%, Research in Motion 10%.
And we're not getting the bid wanted. We're not getting the stop trading, and we see where the buyers are. We're just, every day they're pounding it.
The heightened financial turmoil that we have experienced of late may well lengthen the period of weak economic performance and further increase the risk to growth.
Can't look at it after you buy it because it's so horrible.
But we've had an 8-day losing streak in the Dow that in percentage terms puts it on par, close to the loss suffered in that crash in 1987, close to that percentage loss those 2 days in 1929.
What started in America last year has now spread to every part of the world.
Yes, this is the 14th anniversary of one of the crashes of 2008, and so just thought that it would be a good idea to start the day just to kind of remind us all that the markets can be very irrational, and they can come up at any time. And so yeah, that's the big thing that we want to remember today, because we are in a bear market right now, and because of that, we need to remember what bear markets can look like. Before I get into any more, of course, as you all know, this is not financial advice, not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and this is just my opinion on the market. So let's go ahead and move on into the chart. Really, not a whole lot has changed. Yesterday, at the beginning of the day, I put this little red arrow on the chart. And let me go ahead and just kind of dive into like a 5-minute. You can see here, this was the open. We went up, exactly where I thought we would. We didn't go down quite as far as we did. We started to move up. Overnight, we did see a move up a little bit higher. And if you were on our Discord, you know that we took some trades overnight. It was about, I want to say like maybe 10 p.m., somewhere around there last night where we went short. And currently, some of our members are short from about 37.33, and that's on the ES futures. Even though ES did spike up to about 37.50, which is a level that I have been paying really close attention to. Excuse me. So with that, what I expected to happen, let me just go ahead and dive back out here. What I expected to happen was to see a move up here to wave 4, which may have gotten in last night. We may see this gap fill, may still happen. We might still see this gap fill today. I would expect that it would happen today if it were to happen. I don't expect it's going to go into tomorrow. And then from there, more than likely, we're going to start another decline. Now, I am skeptical because I'm seeing more and more and more people talking about this very thing that we've been talking about for the better part of a month now. We've been tracking this crash ever since all the way back here. We were talking about getting short. Back here, we were talking about getting short. We had a huge gap down, continued to go down. We were able to make really, really great profit on the way down. But now everybody is talking about this. So I do have to approach the market with a little bit of conservatism because of the fact that now everybody is talking about this, this fifth wave down. What's going to happen from there is really anybody's guess. But at this point, this is what I'm currently looking for. I'm looking for a move down to 3,600. Want to go below 3,600. And from there, look to see what's going to happen. What I'd really like to see is a swift and fast move down to 3,500 to where we would find a bottom. Now, is it possible that we did already find a bottom when we were down here at about 36.25? Is that possible? Of course it is. Of course it is. We're going to take this one day at a time. We entered a trade last night. Basically, we were looking for, and what we could continue to look for, is to look for, a push up into the end of the day to short. And that's kind of what we did, right? So we saw a big move up into the end of the day, which I expected, and I mentioned that at the very beginning of the day. This is probably going to be an up day, and more than likely we're going to pass 3,700, and I'm looking for a gap fill up there at about 3,750. We didn't quite get that complete gap fill. We got up to about 37.37. Maybe that was good enough. We'll just have to wait and see. I would be interested in adding to the short position that I do have, because my short position right now is not very big. I had layers, and only one of my orders did get filled. And I'm going to be targeting a move down below 3,600. We're at 37.19. More than likely, we're going to see a little bit of a gap down, right? Because the futures is down below 3,700 right now, which means SPX is going to be about 10 to 20 points lower than that. So with that, I'm going to be looking for a continuation to the downside, potentially starting today. If it doesn't happen today or tomorrow, it will happen next week. I really kind of expected that it would happen before the end of September, because again, that's kind of the end of the quarter. Tomorrow's the end of the quarter, so we're going to be looking for some volatility going into today and tomorrow. So really going to be keeping an eye on this, because I think there's going to be some great opportunities, and whatever move we do get, it's more than likely going to be very fast, and it's probably going to recover equally as fast. Do I think we're going to see just a complete drill into the end of the day tomorrow? Probably not. If we do get the drill, chances are pretty good that we're going to see a significant bounce into the end of the day. Whatever we see, if we see a quick move down, we're going to be looking for a quick move up, V-shaped style. Really what I'm kind of going to be looking for is this right here, but kind of in the opposite direction. I'm going to be looking for move down and up versus up and then down. That's really what I'm going to be keeping an eye out for. And when that happens, I'm going to be looking to get long. I'm going to be looking to get long, and just being very careful not to catch a falling knife. But I do think that here in the beginning of October, we are going to see a little bit of a bounce. But going into the end of October and into the end of the year, I think there's going to be another decline. But we're just going to have to wait and see. I'm going to go out here a little bit just to kind of point out the reasoning for where I think and why I think the market can go where I think it may want to go. You can see here, this is just wave 5 of wave 3. And then again, that bounce, right? If we do see a move down here to like 3,500, not that it's going to get that low, but if it does, more than likely going to see that bounce. And we'll kind of see how far up it goes, but more than likely, if we break this red line here at 36.36, if we break that low, that's going to provide resistance on the way back. Okay, so that's where I think we're going to see some resistance before we see another decline. So you can see I've got a channel on here, and with this channel, I've got a pivot here, I've got a pivot here. I could pull this down just a little bit more if I wanted to grab this pivot, but I'm not really interested in that right now. But I've got this pivot low right here, so that's what's taking me down here, going into the beginning of October. The closer this gets, if we do go into early next week, you can see the price goes up just a little bit. I'm going to be looking for something like this, then to see a retrace before a further move down. Now, I'm talking about a further move down outside of a channel that I've got drawn. I do want to point out one more thing that, again, not a lot of people are talking about. So let's pull this channel on here. What this channel is this pivot here, pulled back to this pivot right here. Okay, so does that prove any kind of support and resistance that is worth paying attention to. Well, I see that we do have some resistance here at the median, and it could be that I do need to make a slight adjustment to it, because you can see we've got some resistance here, and then it's moving up above where over here was below. So it could be my channel is off just a little bit. But if we are going to see a drop into the end of the year, if we are, right, this is a big if, and I definitely would not recommend any kind of heavy bets on something like this. This is me with my bear goggles on right now, and I do have to trade this, a little conservatively. If we do see this break and we do see this retrace and we do see the resistance here, this becomes much, much more realistic. And this is going to be a move down to 3,000 by the end of the year. Now, don't crucify me for this. This is just a bearish view. There is a bullish view, and I'm not ready to entertain it at this time, but there is a bullish view which would take us up, not to all-time high or anywhere near that, but back up to the top of this channel at least. This could take us back up to 4,000, 4,100 by the end of the year. That's certainly possible, but we kind of have to see how this ends before we determine how things will go back up to to at least a lower high, but still higher than where we're at right now. One of the reasons why I am interested in getting long positions down at below 3,600, potentially down to 3,500. All right, guys, this is really it on the S&P. I've been doing some analysis on options going back into the beginning of 2020, looking to see what options open interest looks like. And I got to tell you, the way options look right now is the complete opposite of what options looked like before the COVID crash while the market was going up. So it's very interesting that we're seeing options, open interest, and value at the place where they are right now. If you want more information on that, of course, you can always reach us on our Discord server. And of course, with that, if this video did help you in any way, shape, or form, you know the deal. Like, subscribe, share, all that good stuff. And if you need access to our Discord, you can find all that information on BitDoctor.org, as well as access to subscribe to our free newsletter that we send bi-weekly. And last but not least, wherever you are in the world, I hope you're having a good day, a good night, and a good evening. Take care, everyone.